Good morning, YouTubers. So it's the Saturday morning portfolio overview. So sorry I missed one from last Saturday. You probably would have got an inkling into it during the midweek pie update that I did. But to just crack on in with it, let's have a look at the overall portfolio. So, just quickly on the pies, obviously you can see it's 5.54% up. I have put some extra funds into there this week, so we're at £2,200 there. Please check out my midweek pie update if you want to know more about that. So on the main portfolio here, we've got a total portfolio of £7,960 and 8p, including the £349 return, which is 4.60%. This week, particularly strong performers have been the kind of more stable, long-term kind of dividend style investment. So AGNC's up a real fair amount this week. As you can see, it had a bit of a jump up here right at the start of the week. We are only talking 50 cents essentially over the whole week, so we've gone from like $17.50 down almost up to 18 at some of the peak here. But for me personally, because I hold a fair chunk in there because it's a dividend paying and I quite like to diversify in the portfolio, that has given us a 7.73% return on its own. So £167, which is pretty much nigh on half of the total return here. Obviously, that's not a very exciting stock. It does tend to go up very small amounts, but obviously it's relatively stable being a REIT. Apple here, put some further funds into them in the middle of the week, so we did creep over £1,000 as a total return, but it's just dropped underneath. They had their earnings report, which they smashed earnings, but barely affected the share price. In fact, it actually went down slightly. I think that's more a case of well done, we knew you were going to smash earnings, but what about the next 3 months as the economy reopens? So we shall see how that goes. Put some more further funds into Churchill Capital, CCIV or Lucid Motors to be. Tried to get in yesterday when it was on a bit of a dip. I put a buy order annoyingly at about 20.5 cents for 8 shares, but that didn't go through because it didn't quite get to that. So have another go at that next week. If not, then we'll just have to buy at a slightly higher price. And then other investments, put some further funds into Square. So you'll see here that's dollar cost averaged up my buy price because it was on a bit of a run, although it was a dip midweek. And then I bought some further funds in Uber. So here we are at the bottom here. It tells you what my biggest holdings are. I don't know why it doesn't actually give you the kind of actual value. But in terms of my portfolio, obviously AGNC being my biggest thing, I would like to get that down to about 20%. So probably not going to look to put too much more funds into it. What I would like to do is perhaps put some funds into Churchill Capital, some into Uber, and some of these other stocks at the top here. And then you can see the rest of the percentage here, and then these ones that are like 0.58 are basically part of the pie, because obviously it divides those funds over 50 stocks. So yeah, going generally speaking all right. Nip on over to the invest part to have a look at Neo. That's been on a little bit of a run in the last week or so. Obviously it's down overall on the week, but in terms of a month view, we are kind of pretty much level with where we were at the beginning of April. So, pretty stable stock at the moment. So, I hope you enjoyed that. It's a very quick little overview for you there. And fingers crossed for a smoother market in the weeks to come as earnings seasons come, and the market sort of settle down. And hopefully, as you'll see, as time goes by, I will look to invest further funds into some of these more conviction stocks. So the ones that I believe might go up further, like Churchill Capital. Obviously, this isn't financial advice. I'm not a trained financial advisor. You need to do your own research and basically make your own decisions. Don't rely upon my information. You should just use it as guidance of your own nature, however you see fit. I am just a guy on YouTube, so please do seek independent legal advice if you are thinking of investing in the market and you don't really understand what you're doing or want proper formal guidance. With that said, please do smash the like button. We're up to 115 subscribers. So in the last sort of week or so, we've gone up 15%. So that's really good. Looking at some of the stats, more people are watching the videos for longer, which is pretty impressive because I haven't really had time to do many of the others, but maybe that's some research that I should do, is to see my audience prefer the stock ones over the ones of being frugal and property investment. Who knows? But some of those ones are the most popular videos. So hopefully as time goes by, I'll have a bit more free time. Anyway, so please do not forget to smash the like button and subscribe to the channel, and I shall see you next time.